What's going on, people? It's GBP baby. It's currently 9:54 p.m. on Sunday the 4th of June 2023. Welcome to my weekly review and hello to all my new subscribers. So I'm going to start with the weekly. I'm going to go straight to the daily, but I did want to make it clear that I am expecting us this week to be staying range bound between this swing high and this swing low. So I'm not expecting price to be leaving this range next week. I'm not expecting us to trade lower or higher than these levels here. So I just want to make that clear. And then we're going to drop down to the daily, and you'll see that I've actually marked out the highest body and the lowest body so that I've delineated a clear range of where we actually are within the daily. So if you watch my recent video on Thursday, I did apply the PD array. I applied the up-to data ranges, and the up-to data range looks back 20, 40 and 60 days. I decided to look back 20 days because it keeps us within the current trading range, and that's why I've marked out the highest body and the lowest body, and then I've delineated the midpoint, 25% level, 75% level, and then I've also split those levels up as well. Right, so you can see that last week we traded aggressively up into this fair value gap. We turned away from it once here, and we got an aggressive turn away from it again here on Friday during non-farm payroll. As we turned away, you can see we traded down below the 50% off the current trading range. I'll say that again. We turned around and traded aggressively through the 50% level of the current trading range. What this means to me is that I now don't want to see price post back above this level. It can wick above this 50% level, but I don't want to see price trade. I don't expect to see price trade any higher because this is showing bearish nature, and the likelihood for us to be looking for lower prices and wanting to trade back into these ranges resting down here. So we'll drop down to the 4-hour, and you can see our price stepped its way up, traded aggressively through that 50% level, and then turned away and aggressively traded back through that 50% level. One thing to pay attention to is the way that price steps up these levels within the range. So when you're looking at a trading range and you split it like this, it's easy to understand how price trades to a level, finds support, trades to a level, finds support, trades to a level, and we failed to find support here. You'll see we traded through it, which is why now the fair value gap that is left on the 4-hour, I expect this to act as resistance, which is again adding reason as to why I'm expecting us to see lower prices in the coming week. Furthermore, we didn't actually take out this swing high here, although I anticipated it. We actually failed to take out that swing high. So again, I see this as a failure swing, and we had a clear break in market structure here, although it's only a small range between this low and this high. Although it's only a small range from this low and this high, you can see how aggressively we traded through it. So again, I'm not expecting price to come anywhere near these levels anymore because it's a shift in the market, and we should be looking for sell side liquidity. And we can see some sell side resting at this swing low here, a fair value gap, and we have obviously this bullish order block resting down here. So I'm going to bring up, I've actually marked out some PD arrays on the daily and weekly. I recently rewatched ICT's month 7, I believe, which is his short-term trading videos in his core mentorship, and he states how important it is to have daily and monthly PD arrays marked out because those are the levels that price is likely to refer to. This is actually the first time me actively applying it, so I thought I'd share it with you guys. So yeah, I'll get those up for us and we can have a look at where we can expect price to be trading to. So we'll start with the weekly because I've actually only got one weekly PD array marked out, which is this weekly bullish order block resting here. So I've marked that out as a PD array. We do have this fair value gap, I guess, but I'm not going to mark that out for now because I don't want my charts to be too messy. So we'll drop down to the daily, and you'll see that I've also marked out this bearish order block. Although it's a tiny candle, you can see our price traded through it past here, making this a bearish order block. So I've marked out that, and I've also marked out the mean threshold of that, which would be the 50% level of that candle. And this is the weekly bullish order block, and then I've also marked out this daily bullish order block. You can see that this daily bullish order block is resting in the discounted area, which means below this 50% level. I'm going to make this thicker. So in terms of where price is likely to draw to, since we traded into a premium and got rejected so aggressively, I'm looking at all possible discount PD arrays. So anything below this 50% level, I have my eyes on for a reach on liquidity. Now on the daily, I don't really see much. Oh, you can see we just opened. On the daily, I don't really see much, but on the 4 hour, there is a lot more. So we have this swing low here. So I'm going to mark that out as swing south side liquidity. And in terms of premium arrays that I want to see price trade to, I do want to see this fair value gap get traded into, and that this is where I want to be looking for sells. So whether that's on Monday, Tuesday or Wednesday, I expect the high of the week to be resting within this fair value gap, probably around this 50% level, because again, as I was showing earlier, how price steps up to these levels, I expect price to step down from these levels. So once we traded through this 50% level, I now expected that as resistance. And again, we have that daily bearish order block to support that and the mean threshold. So that's this area here is where I'm looking for sales, and I'd like to see us draw down into this sell side liquidity. We also have this fair value gap resting here. And if we mark out the breaker, which is this swing high here, you'll actually see how that fair value gap rests perfectly within this breaker. What makes this a breaker? We have a swing low here before the move up, and we have a swing low here, which is the previous swing low. So it's a swing high between the two swing lows, and that's what I've drawn out. And you can see how perfectly in the midpoint that this fair value gap rests, which is again adding reason as to why I'd like to see price eventually draw down here after making the high around here. So that's pretty much my expectations for this week. Not much more to be said. Obviously, after Monday, as if you've been watching me for a while, you'll know that I don't trade Mondays, and that I prefer to do a proper review on Monday, because once Monday's traded, it's usually a lot more clearer on what the market wants to do. Mondays tend to be quite unpredictable, so that's why I tend to stay out. Also, they can be quite consolidated as well, so I tend to stay out for that reason. But other than that, yeah, that's pretty much everything for GBP. We will take a quick look at DXY. Now, I don't have as much analysis for DXY in regards to... I don't have as much analysis for DXY in regards to the range testing that I was doing with the pound. However, you can see how this fair value gap, we traded on upside, downside, and then we traded back through it very aggressively on non-farm payroll after trading to this bullish order block. So after seeing that, again, this should now act as resistance. So when price comes back down to this, I want to see this provide support for dollar so that we can push higher, and of course GBP can move lower. I've also got my eyes on this massive fair value gap resting up here, this low to this high. I've marked that out. We traded on the upside, downside. I expect upside trading to be happening, but you can see that we've witnessed some resistance. As you can see here, we traded to it and got rejected. This acted as a rejection block, so it's possible we'll see some resistance as we trade around here, which again is why I'm expecting us to be range bound this week, because I can already see where the resistance is likely to occur. But other than that, in the longer term, I do have my eyes on this massive gap here. That's why I have that drawn out in blue. So I would like to see price eventually reach up into that. Of course, next week we do have FOMC. These FOMCs have been coming around rapid, but weeks have been moving fast, so that I can imagine there's going to be a lot of movement in that week, which is why I wouldn't be surprised if this week, as I said, is range bound. So yeah, that's pretty much everything I wanted to point out, really. I'm expecting lower prices. I'm looking for sells again in this fair value gap, and yeah, that's pretty much everything. Of course, again, tomorrow I'll be making a video and we'll see what Monday is saying. That's been everything from me. This has been GBP, baby, and I'll catch you in the next one. Peace.